Okay, we're going to go ahead and get started. We want to welcome you to a first-time homebuyers webinar. And in this webinar, just a few housekeeping items. We are going to be presented information from Joseph Gordon with Select Group Realty. He's our agent that is helping us out today, has graciously agreed to review some of the purchase transaction information. My name is Jennifer Young, and I am with the mortgage team here at University Federal Credit Union. And if there are questions that you have during this webinar that you would like addressed that are very specific that we may not cover, you're welcome to contact us direct at that number 801-481-8840. Also, through the webinar, there will be an opportunity to ask questions. If you look on your screen, you'll see the questions tab. You're welcome to go ahead and type out whatever questions you may have. We'll address those questions periodically through the presentation, and then at the end give more opportunity to ask additional questions. So feel free to type in those questions. We're going to go ahead and get started. For this webinar, we are really focusing on first-time homebuyers. In this webinar, you're going to hear part of the process that you can anticipate, some of the information that you'll be asked to provide, as well as what to anticipate as a buyer. At the credit union, we offer multiple loan programs available for you. The conventional, FHA, VA, fixed rate, adjustable rate, short-term construction, and jumbo. But for this presentation, we're really going to focus mainly on the conventional and some FHA information as those pertain specifically for first-time home buyers. When you're getting ready to purchase a home, there are a lot of different parts to that experience, and this is just an overview of what you can anticipate. You'll start off your experience with doing a mortgage application. That application would be completed by you, and then we're going to ask you for additional information. Some of that information that we're going to ask for are things like your pay stubs, W-2s. We're going to verify where the down payment is coming from, so whether it's coming from a savings account or if you're getting a gifted down payment from a family member, or if you're going to be selling an asset. We just want to be able to document that information, where that money is coming from, and so we're going to be asking for that information. Along with that, when you find a home, you'll be asked to provide a copy of the purchase agreement on that home as well. Once we go through that information and evaluate the information, we address and issue you a pre-approval letter. Now, that pre-approval letter just tells you that we have reviewed the information and we've evaluated it and we've approved you for a set amount. And there may be additional contingencies to that approval, like verification on the property, getting an appraisal, following up with title work, some additional things like that. But that approval just gives you an idea of what you're approved to go out and purchase. Once you find a home, then we'll put what's called a formal approval in place, and that means that we're taking away all of those conditions and giving you an approval that you're ready to go forward and purchase. At that point, we'll formalize and get an appraisal and the title work. And then once everything is finished up, the closing is when you go to the title company, you sign your closing documents, take the rest of the down payment, and then that's when it would record and you would receive the keys to your home. Now, that process takes about 30 days from start to finish. A lot of times we suggest that you get pre-approved before you look, and sometimes it takes longer than 30 days to find a home. But once we have a pre-approval in place, that pre-approval stays and is good for 4 months. So you do have some time to work in there finding a property. There are a lot of variables that will affect your payment in this qualifying process. The down payment obviously has a big impact on your payment, depending on whether you put a minimum down payment or you're able to put more. Whether you purchase a home that is a condominium or in an HOA. An HOA is a homeowners association. That just means that you're buying a home that is in a formal association that might have grounds around the property that need to be maintained, or a swimming pool or tennis courts, things like that. And that's what HOA refers to, are the homeowners association fees. PMI stands for private mortgage insurance. And private mortgage insurance is it's an insurance that covers us in case you stop making your payments, essentially. So it's just an insurance company that we contract with that covers us and allows you to finance more of the property. So instead of having to save 20%, you can put a smaller down payment, even as low as 3% for first-time home buyers. And PMI insurance allows you to do that. Property taxes and homeowners insurance are directly related to the property itself. Homeowners insurance just covers the property. It's your insurance coverage. It covers in case there's, somebody throws a baseball through your window or something like that, and you choose that. You choose what company you want to go with, and you just let us know, and then we go ahead and take care of that, included in your payment. And then credit. PMI insurance and credit are the two biggest variables that can impact your payment. Those are the two things that, whether negative or positive, can really have a big impact on it. And the next screen is going to go over the PMI insurance and the impact that credit has on that. If you look at the column at 3% down, you can see that with a FICO score, which would be a credit score, a FICO score of 740, your monthly PMI insurance would be $160. Now, if you look at 640 as a FICO score, you can see that PMI insurance is $476. There's a significant difference between, and that's all dependent on your FICO score. So you can see how important it is to have good credit. At the 5%, this just gives you another example of the difference between a 3 to a 5% down payment and how much of a savings your monthly PMI insurance would be. 740 FICO score at $105, and then again 640 on your FICO score at $319. Again, the impact of good credit. This is really where you're rewarded for the good credit. And in our scenario, we just used a purchase price of around $300,000. On the next screen, you'll see this is the difference between being a credit union member and going with an outside institution. Membership has its benefits, and this is a direct reflection of that. At a credit union, you have the reward of a discounted PMI insurance, and so on a purchase price of $265,000 with a 5% down payment, with the credit union, your PMI insurance would be $92, and if you went anywhere else, you would be paying $125. The difference of those two give you additional purchasing power, and so it gives you an opportunity to actually qualify for more by coming to the credit union and paying the lower PMI. In addition to your down payment, there are a lot of other things that we're going to counsel with you, and we're going to just make sure that you're prepared for. We want to make sure that your homeownership is a good experience. And so we want to make sure that you understand what closing costs are. Closing costs are directly related to purchasing the home itself. And so things like your origination fee that comes to us for doing the loan, that's our fee for doing the loan. You also have an appraisal fee, a credit report fee, those types of things. Those are all referred, your title fees, those are all referred to as closing costs. And it's really important to have a really good understanding of those costs, not only for you as being an expense out of pocket, but also to make sure that you understand some options that you have for those closing costs to be covered either by the seller or by making some adjustments in your interest rates. And those are questions that we can address in detail later. You also need to consider appliances, furniture, window coverings, those types of things in the home. We want to make sure, again, that your experience is a good one and that you have those costs that are going to be coming, anticipate those costs so that you're not blindsided by those. Also, near and future repairs. Homeownership comes at a cost, and we want to make sure that you have a good handle on making sure that you're prepared for repairs, unexpected and expected. We just want to make sure that we're not getting you into something that's too expensive, that if you do have repairs that you can't afford them. And then there's the yard. If you buy a condo, it might be taken care of, but if you're buying a single family home, then you want to make sure that you've got a couple of those things to maintain the yard. Then the fun begins, in the heat especially. Additionally, we do offer, there are a lot of questions that we get periodically from people that are saying that they're building a home, and we want to make sure that there's a distinction between construction loans are offered to those that want to build a custom home, and we actually do offer construction loans for custom homes to first-time home buyers, whether it's a primary residence or those that are seeking a second home, and we do offer a single and a two-time close. Now those get confusing. Those are just two additional options that we have for construction, somebody that's looking to build a construction or a custom home. A lot of times people think that they're building a home when they go to builders like some of the bigger builders in town, Ivory, D.R. Horton, Destination Homes, those types of builders. And when you're buying a home from them, those builders actually take care of the construction for you. So you're just building the finished product. You don't have to worry about the construction loan. And so there is a difference there between a construction, building a home, and then building a custom home. We just wanted to make sure that there was a distinction there. And again, if you do have questions in detail, we'd be happy to answer those. So why now? Why is now a good time to purchase a home? Well, interest rates are fantastic, even though it seems like I still hear on a daily basis that rates are up. Rates are really great, 4% or better, which is a great rate. And you know, the market is a good, stable market. There is a big push right now for ownership. There are a lot of buyers and not very many sellers, and so it kind of tends to be competitive, but it's a good time to own. It's a good time to look at home ownership. We just want to give you an opportunity to see, I know that you all know where our website is because you found our webinar, and I appreciate that. We also want to show you where you find us. So if you go on our website and you click on the Home Center, there's at the very first, it's Contact a Mortgage Consultant, and that's where you'll find information for all of our consultants. And you're welcome to reach out to either the branch or a consultant direct. Either of them can direct you to the right place and make sure. If there's a branch that you'd like us to meet you at that we don't have a consultant at, you're just welcome. Tell us and we'll meet you there. We'll make it as convenient as possible for you to reach us. And sorry, this is an additional one. This is where you get, after we go to the Home Center and click on Mortgage Consultant, here's where this is the screen that you'll find us at. And at this point, I'm going to go ahead and turn the time over to Joseph Gordon. Joseph is going to walk us through, on the real estate side, the details of the contract and the real estate on the purchase side.
Okay, so when you start your home search online, it's really important to make sure that the website you're using has some really great tools. You want to make sure that the site you're using has a live feed to the MLS for the state of Utah, and that it's updated in real time. You know, a lot of websites, such as Zillow or Trulia or Homes.com, have to be manually updated by realtors, and so sometimes the info on there can get dated. You want to make sure that the website you're using can auto send you new listings. So once you go in there and plug in your search criteria, it'll automatically send those to you when they come up for sale. You'll also want to make sure that there's automated updating. So when a home goes under contract or it's sold or the price is reduced, you get notified of that once you plugged in your search criteria. And to make this very easy for you as members of the credit union, we actually built a home search website with all of these tools. Oh, sorry, just one sec. There we go. And perfect. Okay. So if you go to the Home Center option on the main menu for the credit union's website, and you click that drop down, under Home Services, there's a button that says Search for Homes. And if you click on that, it will take you to that private access to the MLS for the members of the credit union. When you go there, you can plug in your search criteria, you can pick the city you want to be in, and we can set up an auto sender for you, like I mentioned before, so that every day when new homes are bought and sold, it'll automatically email those new listings to you. Now, when you find the right home and you want to make an offer on it, the first thing you're going to do is put down what's called earnest money. Your earnest money is usually between 1/2 of 1% and 1% of the purchase price. So if you're buying a $200,000 home, you're usually, $1,000 to $2,000. Now your earnest money is deposited with your real estate brokerage that's helping you, and that money actually stays in that account until you close on the house. And then at that point, it goes towards your down payment. Now, definitely don't get scared about this because there are 4 deadlines on your offer that protect your earnest money. That way, if you run into some challenges, you can cancel and keep that. Now, when you do make the offer and you sit down with your real estate agent and your loan officer, there's 4 main things that you should go over just to make sure you're really clear on what you're offering and what to expect with the purchase. The first is the purchase price. Your realtor is going to go over some recent comparable sales in that neighborhood, talk about the market trends with you, and also find out if there's anybody else competing to buy that house. So that way you'll know how strong you need to come in with your offer. You're also going to want to double check with your loan officer about your down payment. Make sure that you're crystal clear on that loan program you've chosen, where your down payment is coming from, and then of course the monthly payment. You want to make sure that you're clear on how much it's going to be costing you every month, and what your interest rate is going to be, and so on. And then lastly, your closing costs. Double check with your loan officer on how much your closing costs are going to be, so that if you're going to have your realtor ask the seller to pay for that, they'll know how much to ask for. And again, the loan officers at the credit union are fantastic and very thorough, and so they'll go over all of this with you in detail. Now, when you make the offer, you can actually ask for additional things in addition to the house itself. So, for example, if you see, some nice kitchen appliances that you like, or a hot tub, or even a pool table, you can ask for that. Most people won't include their dog or their cat, so you probably won't ask for that. But everything else, though, most things are negotiable. Another thing that's great to ask for or to set up is what's called a home warranty. Now, the home warranty usually costs between $340 and about $450, depending on which one you go with. And it's a great thing to have because it covers all the major systems in the home for 1 year. So your electrical, your plumbing, your appliances. And if anything goes out during that year, you just pay a $60 deductible to cover the trip charge for the contractor, and everything else on the repair or even the replacement that you'd need would be covered. Now, about 90% of sellers will actually pay for this for you if you ask. So be sure to ask your realtor to ask for that when you're making the offer. And just a little quick tip here, you can actually renew your home warranty every year after it expires for a discount. And this way you're always covered as long as you own the house. Now, when you make the offer, there's 4 key deadlines, and I mentioned that a little bit ago. And all of these are designed to protect you and to protect your earnest money. I'm going to run through them briefly here, and then we'll go over them in a little bit more detail. So your first deadline is your seller disclosure deadline, and this is usually 3 to 5 days out from when you go under contract. Your second deadline is your due diligence deadline, and that's usually 10 to 14 days. Your third deadline is your financing and appraisal deadline. That's usually 21 to 30 days. And then lastly, of course, is your settlement deadline, which is normally about 30 to 45 days. Okay, so the first one is that seller disclosure deadline. So once you make the offer and it gets accepted, that's when this clock starts ticking on the deadlines. Normally this is 3 to 5 days out from when you go under contract, and that gives them a deadline to send you what's called the seller disclosures. And this is a 6-page document. It asks them about 25 questions about the house, so everything you can think of. Have you had water damage? Have you remodeled? Have you, smoked meth? I mean, it literally asks them all these questions about the house. And what this does is it protects you in writing in case something isn't disclosed. So, for example, if they say, we haven't had any problems with rodents ever, but then, 6 months later they irrigate the field behind the house and some mice show up and your neighbors say, oh, it's always been that way, you can go back and have them handle that cost. And so this is a really important thing. Now, you'll review this with your realtor, because obviously your realtor looks at quite a few of these, and if there's any red flags that pop up on there, this is your first opportunity to cancel and keep your earnest money. Now, if you don't have any red flags and you're ready to move forward, then you go on to our second deadline, which is our due diligence deadline. Now, this is your opportunity to cancel for any reason at all, even if you have a change of heart. So during this, 1.5 to 2 week period, you can have an inspection done. Usually it's $300 to $500. You can have any other test done that you'd like a radon test or mold or meth, anything like that. You can even have a family member that's maybe a plumber or an electrician come look at the house if you'd like. But this is your chance to, if there are any major things that pop up in the inspection, you can cancel the contract. Now, if there are a few minor things that pop up, which is really common, this is your chance to request from the seller that they take care of those repairs. And at that point, the seller will either agree to everything, or they'll come back and say, well, we'll do some of these repairs, but we won't do all of them, or they'll say no to everything. And if there's anything major on there that's a really big deal to you, at that point you can cancel the contract and move on to find a different house. However, if you're able to reach an agreement with the seller on what repairs will be taken care of, then you can move forward. Another important thing I want to mention is that sometimes sellers won't be able to do the repairs they won't want to, but they'll offer you a price adjustment. So maybe they'll drop the price by $2,000 to help compensate for that. So if everything checks out there and everything looks good, then you move on to our third deadline, which is our financing and appraisal deadline. Now, this is usually about 21 to 30 days out from when you went under contract. And this is really important because this is our deadline for making sure that all your financing is done. You know, you've gone through underwriting, the appraisal's been ordered and it's come back, and we know that the home is going to appraise for the price that you're buying it for or higher. Now, if the appraisal comes in lower than the contract price, this is our opportunity to renegotiate with the seller to get them to come down on price. Now, most sellers understand that they're at the mercy of the appraisal, and they have to be flexible. However, every so often you might get one that'll say, nope, we won't drop it. And in that case, if you don't want to pay the difference in cash, then you would just cancel and keep your earnest money. So again, another chance to protect that earnest money. Now, if everything on the appraisal looks good and everything with your loan is fully approved, which again, the loan officers at the credit union are really thorough with this and are usually done ahead of schedule, so there's very little stress when it comes to this. Then you move forward onto our last deadline, which is our settlement deadline. Now this is again 30 to 45 days out from going under contract. Now 1 to 2 days before you close on the house, you want to have your final walkthrough done. And that's where you'll walk through with your realtor, make sure that the house is in the same condition that it was when you first went under contract. You'll also want to make sure that if there's anything that they agreed to leave, like a hot tub or a fridge, that everything's still there. Occasionally sellers will forget and they'll load something up, and you just want to make sure that everything's put back and that it's in the same shape that it was before you sign. Now, when you go to sign your closing papers at the title company, usually it takes about 45 minutes to an hour. You'll want to bring 2 forms of ID with you, so usually a driver's license and a debit card will work just fine. And then you'll also want to bring your down payment. Now, you can either bring a cashier's check for this, or you can do a wire directly from the credit union to the title company, which is really easy as well. Now, from that point, your loan will usually fund within 1 business day of you signing, and you'll be recorded on title as the new owner. And this is when you get your keys, jump up and down for joy, and celebrate.
Okay, so then the question is, why us? Why come to University Credit Union? We are very membership driven, and we really love our members. We take care of our members. Our fees are very low. And one of the questions that we get asked most often is, do we hold our mortgages? And the answer is yes. Once you do a mortgage with us, we keep that mortgage and we service that mortgage for the life of the loan. And so unlike many others, we don't sell ours on the open market. We keep those. And so our members make their payments to us throughout the life of the loan. Now we're going to open it up. There are a couple of questions, and this is where I'm going to encourage you if you do have questions. There was a question, do we have a restriction? Can you live outside of the state and still qualify for a mortgage in Utah? And the answer is yes. We require that you have your membership, but we don't put a stipulation. You can purchase a home in Utah, and we would love to work with you. The only stipulation on that we work with, we only do within the state of Utah. So that's where our limitation is we finance within the state. You can live wherever, but yes, we do finance. And I'm going to wait and see if there are any other questions. One of the questions that we had in the last presentation was on FICO score. There was a difference between FICO score, so I'm going to go ahead and ask that. or answer that. The lowest FICO score that we will work with is 580, and 580 would require you to go with an FHA loan, which is fine. We do those loans as well. 620 qualifies you for a conventional, but what we'll do, the most important thing that we do is we'll go through and we'll look at what option is the best for you. We'll go through and give you lots of different scenarios and lots of different options, and then you'll decide in the end what's best for you. Just our job is to give you options, your job is to choose. There was a question, what's the best advice for a new homeowner? That is a good question. Joseph, do you have good advice for a first-time home buyer?
This is an awesome question. I would say the two key things you've got to do are, number one, know what to expect. And so that's why, well, know what to expect, number one, and number two, have great people helping you. So, you know, being educated and ahead of time by your amazing loan officer and your rock star realtor is going to be a huge thing, because then you'll have minimal surprises, you'll have a fun, exciting experience, and you'll love getting into your house. So I would say, you know, great representation and education are key.
That's good advice. My advice would be, don't be afraid to ask questions, because there are no stupid questions. We get asked questions all the time, and honestly, I don't think I've ever thought, well, that was a ridiculous question. So ask questions. There's a lot to soak in, there's a lot to take in, and it's an important purchase. We realize that, so don't be afraid to ask. There was a question on what is an average amount for closing costs. That is a good question. Obviously, the higher amount that you finance, in other words, when the lower down payment that you put, so if you're putting a 3 or a 5%, your closing costs are actually going to be a higher percentage than if you were financing less, if you came in with a 20 or 30 or 40% down payment. And across the board, I would say be prepared for somewhere in the range of 2.25% to 2.5% in your closing costs, and that would give you an amount that would cover your origination fee, your appraisal, credit, title, all of the fees that are involved with that, as well as your taxes and insurance reserves. That's kind of a hard number to put on it, but just an overall amount, 2.25% to 2.5% would be an amount that you could anticipate. Another question is, do you help finance people who have been through bankruptcy? Absolutely. There are still restrictions. FHA requires a waiting period of 2 years, and conventional requires a waiting period of 4 years. But yes, we would love to work with you. We would love to help you through the process. And if you're not quite there to the end of the waiting period, we'll help you be prepared so that when that waiting period is passed, you're ready to go right out of the chute. So yes. How much should I plan to put down as a down payment? You know, that is a good question. A first-time home buyer with a credit union has an opportunity to put as little as 3% down as a down payment. Now, to qualify for a first-time home buyer, I'm going to put a caveat to that. You just can't have owned ownership in a real estate property within the past 3 years. So a lot of times I have people that come in and say, just like this member, I am not a millennial. Well, there are a lot of non-millennials that have never owned a home and are looking forward to home ownership. And you don't have to just be a millennial, and you don't have to be in a certain age group. If you haven't owned a home within 3 years, then you qualify for first-time home buyers, and you can put as little as 3% down. When is a good time of year to buy in Utah? All the time is the right answer. I'll let Joseph answer more.
This is an awesome question. You know, there are really pros and cons to each time of the year. For example, inventory drops by about 20% of homes for sale every fall. So between about October and January, you have about 20% less homes for sale. Although there are less options, the benefit there is that the sellers that are selling during the holidays have to sell. So you usually are able to do a little bit more negotiating and have a lot more flexible sellers that you're working with. You know, springtime, it starts warming up, inventory kicks up about 20%. So this time of year, you have a lot more. Now, although in general, inventory is low right now because of our really strong economy out here in Utah, but generally and historically speaking, you know, you have more homes for sale in the spring and summer months. And that's great because you have more to choose from, but the flip side to that is you have, you know, more sellers. And so usually tend to be a little bit less flexible. So it just depends on the time of year. But overall, right now, like Jennifer said, this is a fantastic time to buy. Interest rates are still at historical lows, and I mean you're in an appreciating market, which is great.
Okay, any other questions? I don't see any other questions. I'll give you just a few more minutes and see if we can't get any other questions. Okay, one more question, and that, this is a really good one. Does the net annual income govern the mortgage amount in addition to credit score? You're qualified, that's a good question. You're qualified based off of ratios, and your ratio is based off of your gross income versus your overall expenses. And those expenses include your house payment, which when we talk about a house payment, you'll hear it referred to as PITI, principal, interest, taxes, and insurance. We look at your house payment and then your minimum obligation on other monthly payments, so car payments, credit cards. We don't look at what you're typically paying, we look at what the minimum obligation is. And all of those debts together can't exceed 44% of your overall gross income. So it does affect your qualifying, but that's how that qualifying works, is your gross income versus your overall debt, and we want to make sure that that's within 44% of your gross income. Hope that answers that question for you. And then another question is, do you have any advice on boosting credit scores? Credit is a moving target. It is a really hard thing to pinpoint, but the best suggestion I can give you is, like Joseph said, educate yourselves. Make sure that you know what things affect your credit. So delinquent payments, for instance, on a credit card, if you have a credit card that has a limit of $1,000 and you have it up to $900 and you kind of leave it there and pay the minimum, that would be me. But you need to make sure that you pay those, that you have the revolving accounts down below, at least halfway below their credit limit. So if the credit limit is $1,000, make sure that you have it paid down below that $500 mark. So, and that does help plump up your credit scores. There are just more than anything, just inform yourself, get more information on what things have impacted the high balance on your versus your credit limits, delinquencies, collection accounts, things like that you don't always. The single biggest thing that we get in are collection accounts that people didn't know hit their credit, and most of those are medical related. So you need to just make sure and educate yourself, keep in touch with it, get the free. You can go and get a copy of your credit report on freecreditscore.com. The more information, the more that you're in touch with that, the better that you'll do. One other question, I'm going to go back on the credit scores. When in doubt, come in and talk to us. We'll help you. We'll pull your credit. We can run scenarios and tell you what things need to be done to help boost your credit. Come and sit down and talk to us and let us counsel with you and let us help you out through that process, because we're happy to do that. So another question is, now a good time to flip a house? How fast can you sell a house after you buy it? You can sell a house as fast as you would like, but you may have a hard time with the financing. Flipping homes are really, I'm going to turn this one over to Joseph. I think he might have a better answer.
I'll give my best shot. No, it's actually a fantastic time to flip a home right now. However, the challenge is finding the deal. So we're in an appreciating market, which is great, but you have to find the deal. That's number one. And number two, I have seen many people run into financial challenges because they didn't know how to properly analyze a deal before putting money into it and before buying it. So a really great organization you can go to is called SLRIA, the Salt Lake Real Estate Investors Association. They have meetings every month, and I would recommend finding a seasoned investor to, if you're new to it, to kind of walk you through. Even if they charge you a little bit, it's worth it. The education's well worth it. But yeah, great time to do it, but have good mentors, and that way you won't make any bad, costly decisions. So.
Okay, I'm going to look and see if we've got any additional questions. If you have any last minute questions, let us know. And just a reminder, if you do have questions that we haven't covered, you are more than welcome to contact any one of our consultants. That 801-481-8840 is a general line that rings at each one of their desks, and so you have a chance at getting any one of the 6 of them. Okay, the question was, can you share today's presentation? Yes, thank you for asking. We actually are going to be posting a link on our website where you'll be able to go back. It will be the pre-recorded, but yes, we did record the presentation so that you'll be able to go back and review it. Okay, it looks like we've covered most of the questions. Hopefully we've captured all of the questions. And if you do have any questions, again, you're welcome to reach out to us. And thank you so much for taking the time and coming and listening to us. We look forward to working with you, and have a great afternoon. Thank you.